Good afternoon, everyone, and welcome to our C2ER LMI Institute Annual Conference sponsor webinar, Trends in FDI. Did our predictions come true? What's next? Presented by Bureau van Dijk, a Moody's Analytics company. My name is Spencer Abrams, and I'm with the Council for Community and Economic Research and the Labor Market Information Institute. Before we begin the presentation, allow me to go through a few logistical items. All webinar participants are in listen-only mode, but there will be time at the end of the webinar for a question and answer session. If you think of a question during the webinar, feel free to type them into the questions box, which you will see into the GoToWebinar interface. You can submit your questions at any point during the webinar, but I'll hold on to them until the end of the presentation, at which point I will go through them and read them out loud to our panelists. Again, feel free to submit your questions at any time during the presentation. Now, I'd like to welcome our presenter, David East. David is Director of Product Strategy, Tax, FDI, and Economic Products at Bureau van Dijk, a Moody's Analytics company. And over the past 18 years, he's worked with large multinationals, consultants, multilateral organizations, academic institutions, and over 150 government investment promotion agencies across all continents. David has initiated the concept and oversaw the development of Orbis Crossborder Investments, the world's first and only tool that combines tracking of Greenfield FDI, cross-border mergers and acquisitions, M&A, and venture capital deals at the company level. His presentation today has been updated since what was presented at last year's C2ER and LMI Annual Conference in St. Louis. Welcome, David, and with that, I'll let you take it away.
Thank you, Spencer, and good morning, good afternoon to you all. I'm going to spend the next 25 to 30 minutes just taking you through some of the recent North American FDI trends, recapping a little bit on what we saw last year, what we're looking to see as we go forward, and hopefully provide you with some informative information that you can take back with you. So let's begin this presentation. So just very quickly, the contents, don't worry too much about this one, we'll talk our way through it. So a bit, first of all, about who are we at Bureau van Dijk? You know, we're obviously a Moody's Analytics company, as Spencer quite rightly mentioned. We are a global organization. We have about 1,000 people around the world in various offices. We are an aggregator of company information. So what we do, we partner with a lot of the leading information providers around the world to ensure that we got the most up-to-date and most accurate information available on companies. So if you think of Bureau van Dijk, you know, who do we kind of, where do you draw the parallels? So I guess you probably heard of things like Dun & Bradstreet. Bureau van Dijk, you know, we kind of own that space of providing this entity level data. What we do, as I mentioned before, we collect this information from leading sources around the world. So we cover information covering things such as M&A deals, patents, AML documents, PEPs and sanctions. So we cover areas such as compliance, transfer pricing, just general entity level information. Once we collect that information, our team in Brussels or in our different back offices around the world will then go and process this information to go and standardize, harmonize it, so you can compare a Japanese company with a US company, with a Brazilian company, apple for apple. So that's one of the key things that we've done there. When we refer to our products, for example, one of the key ones that we have is Orbis. That's the center of our universe, if you like. We have roughly 360 million companies. Okay, so there's a lot of data coverage in there. 38 million of these entities are private companies with detailed financials. So for your lead generation efforts, this type of information is really very, very helpful. This is the information that these companies file. Obviously, within the North American context or within the US, you know, there's not that level of, the companies do not have to declare this information or make it known. Well, that's certainly not the case outside of the US, and you can see that with some of these numbers here. We also track the publicly listed companies, and we have about 80,000 of them, and we have over 1 billion ownership links, and that's one of the key differentiators when it comes to Bureau van Dijk. So in terms of what does that look like on a global level, we have about 63 million companies in North America, roughly 116 million companies throughout Europe, 92 million in Asia Pac, about 45 million LATAM, and so on. So again, for things like, investor prospecting and so on, a lot of government entities or EDAs, IPAs, whatever they want to be called, are increasingly using this information to help them prepare for their investment missions overseas. So let's begin this really by looking at what the current investment climate looks like. I think it's no surprise to say that investor confidence remains fragile. We have seen a marginal increase in Greenfield FDI, but by and large, we live in uncertain times. That's very clear. There's a number of reasons behind this. We have, for example, the trade wars. Again, this is an ongoing issue which you all probably are very familiar with. This is already, forcing certain companies to reevaluate or relook at where they place their operations around the world, particularly looking at their supply chain. We also have things like geopolitical risks, tax policy changes. There's been a slowdown in Chinese growth. I mean, in recent times, we look at things like the impact of the coronavirus. This is having a dramatic impact in terms of the growth of the Chinese economy and other economies around the world. So again, these type of factors are going to feed into this confidence issue. Hence, it's remaining fragile and very uncertain. Within a European context, I was speaking at an event in Vienna recently, and we talked about the decrease in social cohesion within Europe. Again, it's moving away from the level playing field. So for those of you listening who are familiar with the European model and what it was all built upon, it was built about, the European Union was built around creating a level playing field. We're seeing a move away from that. And part of that is what's led to the likes of things like Brexit, for example. We're also seeing an increase in protectionism and nationalism. So again, these type of factors have a dramatic impact, rather than dramatic, maybe a significant impact on foreign direct investment. Likewise, cybersecurity, terrorism, all these factors are playing into this current climate that we live within. So it's interesting times, and we need to be keeping, watching what's happening and helping to advise the companies that you're engaging with how your location, for example, can help them in terms of mitigating some of these risks. I'm British, I'm on the phone, it'd be rude of me not to talk about Brexit, so it is happening, we know that now, okay, so we left, and you'll see this in North or US date order, so month, day, year, we left on the 31st of January. The challenge for us right now is we still don't know what it looks like though. We haven't still till the end of this year to negotiate an agreement, if you like, with the EU in terms of trade and so on. A bit like the US, Brexit though is not the only issue facing our economy. We've got demographic shifts, tech developments, talent shortfalls. I mean, we look at the US, for example, one of the big areas at the top of most people's minds, for example, in the economic development space is around workforce development, right? So again, this is a big area. One of the issues that we've really got to challenge we're facing, and is one that we got to overcome, is trust in business has fallen. Again, we need to really look at a way where we can rebuild that trust, particularly amongst the consumer, amongst the people. Confidence has to return to business. So there is a very clear need for a multi-stakeholder collaboration to formulate new industrial policies. That's one of the big challenges facing Boris Johnson and his current administration. From an FDI perspective, we are seeing that businesses are still adjusting, they're relocating jobs. We're seeing a lot of companies, for example, who have set up in the UK, or even UK companies, starting now to branch out and set up satellite operations in the European market. Dublin in particular has been a preferred hub. People want to have the English language skills. Will that continue? Who knows? I mean, at the moment, the UK could quite happily go and drop the corporation tax, and that could have a significant impact on Ireland. There's a flip side to this, though, and I think this is something that's not been well communicated. There's over 1,000 financial service firms across Europe who could be looking to open offices in the UK to serve the UK market after the end of January. So this is quite a significant point that's been often underplayed. What we're seeing now, and this is a big trend to maybe note down, is we're seeing an increase in globalization. So what do I mean by that? If we rewind back 10, 15 years, it was all globalization. It was, manufacture in China and serve the world. Then we went through regionalization, set up in Asia to serve Asia. Now we're seeing, and this is an area of the market that's remained particularly buoyant, is companies setting up in a market to serve that market. And we can particularly see that in the UK, where it's very evident, particularly in areas like financial services. Manufacturing investment, you know, it's had a significant impact in the UK. It's disappearing bit by bit, and it's at its lowest level in 15 years. Services in particular, again, have been hit. But on the flip side of that, the UK remains very buoyant for technology, and I'll come back to that later in the presentation. And we've seen some significant investments coming to the UK in recent times from the likes of Google, Facebook, and Samsung. What does this all mean, though, from a US perspective or North American perspective? UK companies are looking for growth markets. All right, so you know, if you're advising, you know, board members, for example, within your EDAs, or you're working providing information to the business development teams, there's never been a better time to go and do a site visit to the UK. Not a site visit, sorry, business development prospecting visit to the UK. These companies need growth markets. Let's look a bit more at the trends now. What we can see, we've got the blue line at the top there is really looking at the global trend. So again, 2015 was a good recovery year post the crisis of 2007, where the numbers were probably quite high. And it's been dropping off, and bit by bit, we're seeing there's a gradual decline. As you look below at the orange line, that's the North American picture, and you can see it pretty much mirrors, to a certain extent, the general trend, although it's a lot more stable as we go through 2017 into 2019 based on provisional numbers that I've seen. Looking at it from a greenfield versus M&A perspective, I think this is a really interesting way to look at it, particularly for North America. I was attending Select USA for the last few years. I've had discussions with various companies who have been present there, investors, and they're saying, why does no one want to talk to me? One of the big challenges they found is that they want to enter through a merger and acquisition. It's a mature market, right? So it perhaps makes more sense for them to enter through buying a company that has a developed consumer base already, and then invest further into that company, create more jobs, create new operations. So, you know, I've spoken at length over the last few years at various events throughout US, throughout North America, about the importance of an EDA developing strategies to look at M&A and how they can get involved in that process. It's not about necessarily advising, but it's about being responsive. So let's say, for example, a Korean company is keen to go and buy a local company in your jurisdiction. It may well be about sitting down with that potential investor, sitting down with the company that's currently in your jurisdiction, and laying out the value proposition. What can we offer you? If you retain those jobs in our locale, this is what you benefit from. This is what, you know, we offer you as a location. So hopefully once they've made that acquisition, they use that as the hub to go and grow out further from there. So again, you can see there was a really big increase 2014 through 2015 on the M&A front. And it's gradually falling off. Greenfield is remaining pretty static, slightly up on last year. 2019, I don't have the numbers yet from UNCTAD. Again, once I have those, then obviously I'll provide a further update on that. We're expecting it to remain pretty stable in North America. We're not expecting to see any significant declines, nor any significant increases. We think it will remain pretty flat. So let's look now where this investment is going within North America. So we can see since 2013, these are looking particularly just at projects and deals, cross-border, California, okay, New York State, they've been the large, Ontario being the large recipients of the foreign direct investment, along with the likes of Texas, Florida, Georgia, Illinois to a certain extent. Then we've got BC over here, Quebec. Interestingly, when we look at it since 2018, we can see a darkening. So the darker the color means the higher the intensity, the higher the number of projects and deals. And it's quite interesting, notable to see as you flip between 2013 to 2018, the increase or the darker the colors around the Great Lakes or the Rust Belt states. So that's one noticeable trend there, is we are seeing an increase, particularly around places like Illinois, again, Ohio, and so on. We're seeing a lot of investments happening around there. California still remains dominant. We're seeing a darkening of areas around, particularly BC and Quebec. A lot of that investment, a lot of that darkening is really being driven by areas around software development. And I will touch on that a bit later in the presentation. On this particular slide, what I'm trying to do here is just show you the fact that there tends to be a very heavy focus on the FDI around the large metropoles or large cities. So again, you can see here Cook County around Chicago, for example. Let's bring that back. Boston, Atlanta, LA, San Francisco, Seattle, and so on. So you see a lot of the investment is really focused around those key metropolitan areas. In terms of where the investment's coming from, what are the key source markets? So again, if you're working on creating this FDI strategy for your organization, what are the key markets to focus on? Well, we can see UK remains a good market, and there's never been a better time to go and visit the UK, right? We've just cut ourselves, well, not to say cut ourselves off from Europe, but we've kind of said, look, you know, you UK companies, we've seen that the companies performing the best from the UK are those that are not relying purely on the UK market for their revenue. They have to look elsewhere to grow. So I think there's a big opportunity there. Germany, again, France, and then as we move across into Asia, we can see China, Japan, India to a certain extent, and Australia. Those are the kind of key markets to look for investment into North America. I want to touch upon very quickly, though, the importance of the Canadian market. So, you know, if we look at this, for example, 7% of all projects. So US companies are responsible for 49% of all inward investment into Canada. So there's a really heavy reliance of investment coming from the US into Canada. 65% of all M&A transactions into Canada originate from US, even though it's only 5% of all US outward investment goes to Canada. It accounts for 49% of all inward FDI into Canada. So interesting trend there. On the flip side of that, again, we see about 7% of all Canadian outward investment is actually going into the US from Canadian companies. So it's a real key source market. Okay, so, but this only accounts for 7% of all investment going into the US. So from a US perspective, again, it's just useful to be aware of the importance that the Canadian companies place on the US market. What I try to do on this slide here is not so much confuse people, but give people an understanding, or yeah, I've presented this slide at various events. If we go back to the time of the crisis around 2007, 2008, what we saw, we were looking at the total flow of investment going to those markets, and then we're looking at it over the last 2 years as an average. And it's really significant when you look at it. The countries in red are showing a decline. They're not got to the same stage they were prior to the crisis. They haven't recovered. And this really is the developed economies. And will they ever get there again? We don't know. My suspicion is probably not. Okay, so you see Russia, for example, significantly impacted, less so Italy. Interestingly, as a developed market, one of the only ones that's really remained pretty positive, good news for you guys, the United States. Again, it's led though, look at the emerging markets, though. They're really beginning to take the lion's share of all this investment that's happening. They're showing big growth post the crisis. This is a slide I presented at the event back in St. Louis in June. What I'm trying to do here, I've updated it slightly, but you can see, okay, who are the big investing companies from a greenfield perspective? Sorry, from a greenfield perspective, you see DHL, Regis, Daimler, ABB, Honda Motor, Toyota Motor, Samsung Electronics, and so on. Okay, there's not been a huge amount of change in these companies. We can see there's been very little, if any, change in these companies here. So perhaps you need to look at it over a longer time period. And obviously, when I look at Amazon, for example, I'm not looking at domestic investment. So I'm not looking at Amazon investing within the US. These are Amazon investments into Canada. Okay, so if you see a US companies on here, that's they're investing into Canada, not within the US itself. But again, one of the notable trends I would take from this, though, is a lot of these companies are changing. Okay, they're responding to changes. So the likes of Toyota, Honda, increase investments in areas around electric vehicles, for example, and that's really impacting. And hopefully, we'll see some of that when I show you some examples of some of the most recent greenfield projects that have happened over the past few months. If we look at it from an M&A perspective, again, there's some interesting companies in here that are choosing to enter the North American market. I mean, globally, they're doing a lot of Greenfield FDI, but when it comes to the North American market, they're choosing their market entry really, or they're growing their businesses through acquisition. So likes of Bunzl, SGS, for example. If we look at people like, there's only one company that sits on both lists, and that's Samsung Electronics. But it's particularly noticeable to see big media groups, for example, like Publicis. They're hoovering up a lot of small, mid to small size US companies in the media space. They've been quite aggressive in terms of their acquisition and expansion. Looking now at the industries that are driving growth, or where the growth opportunities are, these are really broken down like this. Communications, right? So we look at the 5G networks, right? There's going to be a lot of opportunity there. Companies are seeking these opportunities in North America. Computer software. So again, think artificial intelligence, think of these new areas. Again, we're seeing a lot of investments, a lot of growth in things like computer software. When we talk about industrial, electric, and electronic machinery, we're thinking really around Industry 4.0. Okay, so we're seeing a lot of increase in appetite and investments around those particular areas there. Transport, freight, and storage. Again, I'll come back to that when you look at logistics. It's really being fueled by the e-commerce revolution, right? So again, we're seeing an increase in that industry making investments into North America. Then you've got transport manufacturing, food manufacturing. I couldn't really split them, right? So we need to eat. Okay, so protein, for example, these new areas of food. Again, we're seeing a lot of those type of investments. Transport manufacturing, that's really been driven through electric vehicles and so on. So again, we're seeing a kind of renewed emphasis in some of the investments around electric vehicles. On the flip side, if we look at the business functions, again, we talk about workforce development. Education and training has really raised rapidly over the last few months in terms of the projects being invested into the US. So again, something to note down from your side. Make sure you got your value propositions very clearly articulated. If you think you have something to offer around education and training as a potential attraction, make sure your value proposition backs it up, but that's a big growth area. Similarly, technical support centers. We all buy stuff now. If something breaks down, we need someone to call. Again, we're seeing a lot of those type of investments. Software development centers. So if I go back to that heat map where I was talking about Quebec, BC, Michigan to a certain extent, we're seeing a lot of investments around AI. Okay, so again, these software development centers, they've seen a lot of investments. Anyone familiar with geopolitics will know that data is the new gold, right? It's the new oil. It's what everyone's talking about. Data centers, we're seeing a lot of those type of investments as well. So again, something to be aware of. And finally, logistics. So a lot of fulfillment centers. So again, if you're looking at domestic investment in the US, you would take Amazon, for example, and set up a lot of fulfillment centers. I mean, I think most days there's a new opening of a new fulfillment center somewhere within North America. What I've tried to do here is just highlight some of the recent investments that might back up and talk back to what I've just gone through there. So, for example, a big investment in December, a big announcement was LG Chem, LG, part of the big Korean group, and General Motors investing in a $2.3 billion battery cell plant in Ohio. And again, this is quite interesting when you look at the rationale that's behind that. So, they talk about a highly capable workforce, okay? They want to talk about the company has an objective to have a key role to become, help the world meet those targets as zero emissions. And that came from Mary Barra, for example. It's a JV. So again, there's a bit of an M&A kind of touch to this project as well. So this is why I said I think further thought needs to be done now. The leading EDAs, as I see it in the future, will be those that provide some type of service, aftercare service, to help companies from an M&A perspective to land. We see again from a food manufacturing perspective, a big investment from a Norwegian company into California. Again, that's quite an interesting one there. They're looking to be close or want to be within the same area, the epicenter of biotechnology and so on. Maple Leaf Foods, again, a plant-based food processing plant. So $310 million. This is a significant investment into Indiana. And again, I think this is something we're seeing within Europe as well. A lot of these plant-based foods are really becoming very, very important now as when agencies are trying to attract companies to set up in these big food manufacturing plants. You know, it's talking about protein, it's talking about plant-based. So again, something to make note of there. We've then got AI, artificial intelligence, R&D. But again, it's interesting to see, you know, they want to become a global hub for robotics and self-driving future. So again, an interesting investment there. That one was in December as well. And in January this year, again, with this fulfillment centers, distribution centers, Ocado, who play a very leading role within the UK, they have partnerships with some of our leading supermarkets. Again, they're starting to partner up now. They partnered in this instance with Kroger in the US. But again, they're looking here they want to, you know, tap into the state-of-the-art opportunities there, particularly around engineers looking to work in robotics and automation. So again, if you've got a talent pool that has those type of skills, it's good to be aware of these types of projects that are happening and what companies are looking for in locations. And this really is where data helps you. If we look at the M&A, what's been happening over the last couple of months, well, you know, I think most of us read about LVMH. I mean, it's a bit of a kind of, what's it called, a vanity purchase to a certain extent. They bought out Tiffany and Company, $16.7 billion though, it's huge. Okay, and we can see this one's quite an interesting one from a strategic perspective. This is a UK company, they're buying Nestle's ice cream business in the US. So if your location has an operation linked to Nestle's ice cream business, we want to make sure that Froneri, for example, do not withdraw that and put it somewhere else. You want to be working with those investors to ensure that those jobs are safeguarded. And again, what they're trying to do, they're taking this as a decisive step towards becoming a global leadership in ice cream. Another thing we've noticed here is Volkswagen, for example, made a minority stake, but $2.6 billion into an AI company along with Ford Motor. So again, they're combining, you know, the big auto manufacturers starting to work closer and closer together. And this instance is really to meet that challenge around the electric vehicle architecture. We've also seen a more strategic investment around UCB, a Belgium company, made an acquisition of Ra Pharma. So again, you know, if your location has some type of presence from Ra Pharma, you need to be aware of this and working with the companies from a long way beforehand to ensure that you're not, you know, those jobs remain in your location. From a BA Systems, again, we're seeing, you know, another strategic entry into the market. They've purchased Raytheon's company's airborne tactical radios business. Again, that's a very recent acquisition. So again, I think it's just really important to cite and to highlight some of these big investments that are coming into the market and what impact that may have on jobs in your community. Looking ahead in terms of rumors, this is my part where I always try and say, get your smartphones out, take a picture. So again, we can see here January 2020, so just last month, an Indian company, they plan to invest in the US. Okay, they're looking to increase, let's go back to that, increase their business footprint significantly in the US to enable tech chiefs' ability to cater to global clients in product development. So again, they're seeing the US as a launch pad. Okay, and this is an Indian software company. Again, big opportunity there. We've got a German company here that again is looking to invest into the US. They've done it through a round of funding, and again, I'll touch on that as we go through the presentation. But again, it's interesting to see what's happening there. We've got another Dutch company here, for example. Again, they're seeing an increase in demand in the US for specific animal feed, for example. And again, this is exciting for them. They're looking to do substantial investments. They've got further ones in the pipeline. Sony, again, household name, but they're looking to set up an artificial R&D center in the US. And they've hired an individual here, Mr. Peter Stone. So again, for those, if you've got your pen and paper ready, Peter Stone, GM, has been recruited to help Sony make this investment into the US. And finally, we have a UK company. Again, they plan to invest into the US. They've secured it through a round of funding. So again, I'm going to touch upon the venture capital stuff as we go through the presentation. Looking at mergers and acquisitions, again, these are deals that haven't yet happened, okay? But you might want to make sure that you're connecting, for example, AECOM. So this company here, sorry, if I go back to this one here, WSP Global are considering a takeover of AECOM. What does that mean? If you have, jobs in your community from that particular, with this particular company here, you need to be mindful of what WSP could potentially be planning. You need to find out what they're planning and see how you can safeguard those jobs. Another interesting one, Spotify. Again, they're growing day by day. Again, they're looking at the Bill Simmons Media Group and the Ringer. We're seeing a Taiwanese company, really looking to save a US company from bankruptcy. In fact, Bumblebee was, as you can see here, they pleaded guilty in 2017 of fixing prices for canned tuna. But again, they're not afraid to make that investment and to take that company on board, even though it's troubled, to get that footprint into the US. Nestle Health Science, again, they're looking to acquire the remaining stakes in Before Brands, but they're using this as well to get hold of the company's patents. So again, the reason I touched on that one there, reference this one, is the fact that they're using that transaction not only to buy the company and buy the company's reputation and so on, but also to buy their patents. So let's go forward into venture capital, which I touched upon. Again, this is one of the key areas I think that, if you're looking at domestic investment within the US, you need to really understand what's happening on a VC perspective, because these small companies could become the multinationals of tomorrow. Okay, and we're seeing here, for example, California, no surprise, is where most of these companies are that are raising venture capital funds in New York, Texas, Massachusetts, Florida, Colorado, Illinois, Washington, BC, and Pennsylvania, and so on. Interestingly, BC's got a lot of deals, but the deal value tends to be quite small. So they're not really punching above their weight there. But again, one of the key things from a multiplier strategy perspective, these are the big VC companies, okay? Now, more often than not, when small companies are raising VC funding, they're doing so to fund expansion. Now, as a small to mid-sized company, quite often your first expansion will be within your own domestic borders. So again, I think there's a lot to be gained from an EDA perspective in terms of monitoring venture capital, in terms of looking at who those companies are that are raising funds, what are they doing, who's actually provided that funding. So if you're targeting, for example, artificial intelligence, which one of these companies here, you can do this type of analysis, are providing finance for companies in the AI space. Okay, so some notable trends, and then I did a little bit more analysis at the bottom here. Let's just take this out, of companies citing expansion. Okay, so these are companies that have raised venture capital that has cited it specifically for expansion, and we can see here almost half of the companies are Californian-based companies. So again, when you're preparing your visits to, or your team are preparing their visits to California, for example, again, I'd really go and be touching some of these VC companies and probably some of these companies that are raising cash as well, and saying, look, if you're looking to expand outside California, this is where you can go. finally, to summarize, in 2017, 2018, I'm waiting for the 2019 report to come out. Global FDI down 13%. FDI into North America, meanwhile, was only down 4%. So it weathered the storm pretty well. Value of mergers and acquisitions into North America down 25%, but down 36% into North America itself, into the US. So again, an interesting trend here. We're seeing not necessarily less deal volume, but we're certainly seeing less in terms of those mega deals. FDI in Greenfield, for example, was up 13% to North America, but most of that was really into Canada. But it was down 20% into the US. So again, things to be mindful of as you go and do your planning for 2020, 2021. I mean, I'm sure your 2020 planning was done last quarter. But again, as we look ahead, again, it's just good to be mindful of this. The early predictions, as I said before, flat. Okay, so again, just be mindful of that as you go out thinking about how you position your community for investment. Globally, there's a war for talent. I think we're aware of this, something I've been mentioning consistently throughout this presentation. There really is, this is one of the biggest challenges facing modern day societies, or for businesses in particular, is this war for talent. What we're seeing in Europe in particular is an increased investment in upskilling. So rather than trying to recruit new people, companies, particularly in Europe, are investing in expansion projects where they're using some of that expansion capital to upskill their existing people, their existing labor force. So again, if there's more incentives that can be offered around workforce development, softer incentives rather than just purely fiscal incentives, that again I think is a very powerful way of making your location stand out. What we're also seeing is a longer term trend towards non-equity modes of international production outpacing FDI. So particularly looking at an increase in things like royalties, licensing agreements, and so on. So you need to be mindful of this as you look to develop an FDI strategy, is being aware that there are changes happening. And finally, and it'd be remiss of me to miss this point, trade tariffs and policy uncertainty continue to negatively impact investor confidence. Hopefully we'll see a change over the next 12 months, 24 months, where this will all disappear a little bit more and trade will go back to being what it should be, which is about open markets, freedom of movement of goods, freedom of movement of people, and hopefully we'll see an increase and a pickup in FDI again. So on those words, we've gone from 2019, we're now into 2020. Hopefully it'll be a bit more like the 1920s, it'll be roaring, the roaring 20s when growth returns. So thank you for your time, and I'm open now to take any questions you may have.
Thank you, David. We will now begin the question and answer session of the webinar. To let our listeners know, the full webinar and recording and presentation will be made available on C2ER's website a few days after the webinar. And as soon as they are available, we will also send out a follow-up email to everyone that's registered with links as to where they can be downloaded and viewed. And with that, I'll see if any more questions come in. Again, if you feel like submitting a question, please type it into the question box in the GoToWebinar interface.
Or alternatively, just going through the presentation, you do again have the option to contact us at Bureau van Dijk at americas@bbdinfo.com. If you have anything afterwards you want to ask, we remain open to take any questions you may have, but please don't be shy.
Okay, we have one. It's in the regions that attract FDI, LA had a darker color than the Bay Area. Is LA attracting more FDI than the Bay Area?
Okay, no, I think that's a good question. I mean, California as a whole tends to receive most of it. When we look around here, yeah, we're seeing there's a stronger intensity. So you can see it from the legend down here. There was more than 192 projects and deals. So we're looking both at Greenfield FDI projects and we're talking about it from a M&A deal perspective. However, I would say that on this map, it's very difficult really to drill in there. But if you look at San Francisco itself, it's probably equally as dark as LA. Silicon Valley, perhaps less so in terms of investments going in there. Why is that? There could be multiple reasons behind that, but my suspicion is that San Francisco remains very much a hub, although California in itself is becoming more expensive. There's perhaps a larger talent pool in LA, available talent pool, who knows? San Francisco is probably a mature or more mature investment location, so that could be a reason as to why.
Next question we have is, what suggestions do you have for getting financial or financing for us as in private companies?
That's a good question. I mean, again, I think it's really a case of really looking at the venture capital. Who are the big companies that are behind these big venture, or behind these venture, who are the most active companies in that venture capital space? Looking and understanding your local ecosystem. I think this is something, again, I touched upon at a recent investment conference. IPAs by and large, or EDAs, we don't so much focus, we focus more on trying to get those big greenfield projects in where we have the mayor or someone big, the governor, cutting a bit of red tape and the big fanfare and so on that goes with it. But I think there's a really, as we go into the 21st, as we evolve in the 21st century, I think there's an increasing need to really understand your local ecosystem. So doing that research, getting that business understanding of who are the companies in your local jurisdiction that are open to foreign capital. Okay, so it might be a questionnaire. It's a way of engaging with your incubators, your startup centers, whatever they could well be, to find out, who are those companies, even scale-ups, who are open to foreign capital, open to growth capital, full stop. Then going to engage with those VC companies who you factored into your multiplier strategy and saying, look, we have a wealth of companies in these particular areas, and they could be in AI, it could be in just, food manufacturing, it could be different types of industries. Look at who those VC companies are that are providing the funding, and going to those guys themselves and saying, look, we have a wealth of companies. How can we work with you to get that funding in to help these companies upgrade themselves?
And there was a clarification on it. It's financials, not financing. So where would one get financial information on U.S. private companies?
That's a trickier question, because obviously, as we know, there's no, where it comes to financial information on foreign companies and smaller size companies, you go to the UK, for example, you can go to Companies House and get that information. You can come to us at Bureau van Dijk. We can provide that information. In the US, it's very difficult because companies do not need to disclose this information. It's a constant challenge. We actually have a special project within Moody's Analytics and Bureau van Dijk in particular, where we're looking at ways where we can try and delve deeper and get this information. But it's a huge challenge, because until there is disclosures that are required by law, it's very difficult to get this information on US companies. I'm sorry, I can't give you more positive information.
As the trend shows that there is a change towards non-equity modes of international production, how are EDOs changing their incentives? Because many focus on tax credits based upon jobs and CAPEX or CAPEX.
Correct. That's $1 million question. Again, I think there's going to be an increased need to companies for EDOs and IPAs to reevaluate what type of incentives they are given, what metrics by which they're measured on. I mean, again, I was speaking at a conference recently on new forms of investment, which are venture capital, corporate venture capital, sovereign wealth fund, single family offices. And again, I think that is going to bring about a change, but that's really about understanding your local ecosystem, really understanding the companies you have within your locale and how you can get them to work with these bigger companies to unlock these opportunities. In terms of the measurement, those metrics will have to change. I unfortunately do not have the answer to what that could be. It's something I'm discussing with some of my peers already, looking at what does the future look like in terms of if we are moving away from, if we're looking more at royalties and partnerships and these types of agreements, how does that evolve the way the EDA is structured in terms of how it's measured?
Thank you.
Again, no straight answer, unfortunately.
The next question is, what are the main things that communities can do to make them more appealing to FDI?
Again, I think this comes back to some of the points, we were talking about the biggest challenge facing most multinationals or most companies today, most investors, is workforce. Really focus on making sure your value propositions are watertight. Do your research, know your investors, know who you're going to target, understand what your value proposition is, but more importantly, understand what workforce availability is. What do you have out there? The other thing I've read about quite recently, and through speaking with colleagues at the Site Selectors Guild, for example, is they're touching on areas such as community itself, house prices and so on, livability. So again, it's making sure that your value proposition includes and focuses on a lot of those key ingredients.
Thank you. Next question, with the recent contractions in the investment banking world, what will be the impact on FDI?
That's a question I'd love to be able to answer, but I don't have an answer for you. That's the question that's got me speechless, as I guess you gather from. I don't have an answer for that one there. It's something I've had a team looking at within Moody's. I know it's something we're looking at, but it's not something I can respond to right now.
And then what are the key factors to attract Greenfield FDI, skilled labor, low cost, location, etc.?
Well, I think you just touched upon it. But again, if we go back to some of those examples of, what I've tried to include here is some of the rationales behind what a company's actually citing. This information is available. Try and look and understand what a company's citing when they've set up a Greenfield project. What are the things they're citing? And a lot of that information is available. Okay, so we can see it particularly within the tool that I've set up, Crossborder Investment, is I got the team to really look at not only where they're investing, what are they doing, but why? Why have they selected that particular location? And again, this will help you in terms of, different companies are motivated by different things. I think there are key themes. One of the areas that I've particularly got or encouraged the team to record are motives. What are the key determinants and motives that companies are citing when they're making investments? Most Greenfield is still ultimately driven by market seeking, right? So again, you can look at that and try and kind of decipher that into different areas, but really most companies are market seeking. That's why globalization, as I mentioned earlier, is a key theme behind what's driving investment today. It's really market access, labor availability. I wouldn't say so much cost. I wouldn't say that that's such a key determinant anymore. Obviously, in terms of, if I'm going to set up a plant there or I'm going to set up an operation in that location, is housing affordable? If it's not affordable, that could be a turnoff, right? Because am I going to be able to attract the right level of talent? It's one thing, living in London, for example, right now, where a lot of people are being priced out. The talent can't come in because there's nowhere, they can't buy anywhere. Even rents are becoming too difficult now. So again, people are looking at other locations, second, third tier cities. So again, I think that's an important area to be highlighted within a value proposition.
Thank you. And it looks like with that, we've come to the end of our Q&A. Give it another minute to see if anybody had any other questions. No? Okay. So thank you, David. Thank you, everybody at Bureau van Dijk, the Moody's Analytics company, for the presentation. And also thank you for the support of the C2ER and LMI Institute Annual Conference. Registration for the 2020 Annual Conference in Columbus is now open, so be sure to register today, and we hope to see you there. Please check the C2ER and LMI Institute websites for upcoming webinars and trainings, and this full webinar and presentation will be made available on the websites in a few days. And again, we will also send out a link to all registrants of where you can download the presentation and recording. Thank you very much, and have a great day.
Thank you, everybody. Goodbye.
Thank you.